Voz here from Modern Wall Street.
Mark here from Trading Market Technicals, and this is
Talking Technicals.
I love it.
It's so much fun.
It's great.
Let's get it going. All right, Mark, so we reminded our viewers last time we were on Talking Technicals about the S&P. We like to open up with that just to get a general feel of the market.
Right, absolutely. You know, you always want to follow the trend, right? The trend is your friend, so to speak. So we want to know what the S&P is doing. We want to know, has the trend changed? Is it continuing? Right, at this point, right, we still deem this as a corrective rally. So let's take a look at what's going on. Let's dive right in.
Sure. So we pointed to our viewers last time. We had a bearish rising wedge, which broke down out of that. Now we have this little V-shaped correction.
Correct.
We took the 61.8% Fibonacci, and we're testing the 200-day moving average.
That's correct. Now, where can we go from here, right? Well, the trend has not changed from our last show. So we're looking for either a continuation of this corrective rally, which we still deem it corrective, right?
Because of low volume, guys.
Because of low volume. That is absolutely correct. We are now approaching a really big part of resistance. Now, if we were to break above this 200-day moving average, logical spot, there's going to be some short covering. Why? Stops are going to be just above the 200-day moving average. And then we'll be looking for our next corrective target, which would be?
Which would be the 76.4% Fibonacci. And now there's a lot of resistance there because of the volume profiles, as you could see.
Correct. A lot of resistance. And also the market tried to break out 3 times, right?
Sure did.
Back in November, December, we tried to break out, and that failed. So now shorts are leaning on this area here. So we're going to see if this happens again. If the market does happen to move higher and we get a short squeeze, a continuation of this short squeeze, then I think we're going to test that 76.8% of 279.91.
All right, cool, Mark. Cool. So really the story hasn't changed.
Story hasn't changed yet. I still deem this corrective. I think, can it go higher? Absolutely. Markets always overshoot, guys. That's the number one thing. So if you think it can't go higher, think again, right? We had some good news on the border, on the wall today. The market's up today, so why not? Let it continue to go higher. That's why I always say I like the dollar cost average a trade, whether it be long or short. You take the timing issue out of it. You just dollar cost average a trade that's going to be right for your trading budget.
You love the DCA.
I do. I love the DCA.
All right, can we get to the request?
All right, let's go. I'm excited.
Thank you guys for getting involved. You know what my favorite part of the request? The handles.
They are
People's
good.
handles are so
very
funny.
Good.
I think that's really what makes it.
I do like it.
So let's go on to
what are
Google.
we doing? All right, let's do Google.
Rickcoin and the KMC 0426.
Oh my God, that's a big handle. That's
great. I like it. I like that. All right, so taking a look at Google.
Okay.
There are some gaps.
Yeah.
But really, I want to address this, Mark. Sloppy, but
sloppy chart.
Like a inverted head and shoulders.
You know, absolutely, it could. Can it be?
I had to ask the master.
Yeah. Oh, well, thank you. But it could be. I like more symmetry, meaning that I like a left shoulder. You could identify a little bit more. The head, obviously, you could see that here. That's definitely a head. And the right shoulder looks pretty good. So can it be? Yes, it can be. Me personally, I'm looking at it, okay, where would the neckline be? And right at the 50.
Look at that.
Yeah, perfect.
And the 200-day moving average.
Perfect, sitting right there. And, of course, the volume profiles are just right above it. So can it be a head and shoulders pattern, inverted head and shoulders, bullish pattern? Yes, it can be. Overall, the chart is bullish. So I'm going to just look at it as a sense that we try to break out here on the right. Right?
I think it is bullish because, look, we tried to break out. We did have a pullback, but on low volume, which is beautiful.
Yes.
That's where low volume is a good thing.
That's where low volume is a great thing. And I like the fact that when we did pull back on low volume, I like the fact that it held that 38%, that area just below that neckline. So now it can gain some momentum and we get some more positive news. Like today, Google has an opportunity to break out again and hold the breakout because we failed back in February, late January,
and
early
if we
February.
do, it looks like we have support right at the 50-day moving average.
Yep.
We have the volume profiles creating
to
some
the
support
left.
for us too.
Yep, absolutely.
So it's a tighter range here.
Yeah, and I like the chart. I think the chart looks good. And wouldn't you rather buy it here than where we were back in July? Of course.
Of course. And then look at the MACD and RSI. I would say it's like resetting itself.
You know, absolutely.
Is that a good way to put it?
Yeah, absolutely. I love that. MACD and RSI resetting, coming off of an overbought state, back down to a 50% in the RSI. That's where I want to see it hold now. I want to see the MACD and the RSI curl back a little bit, but I want to see that momentum continue to move higher, making higher highs and higher lows.
All right, can we move on to the
next
request?
Let's go. Let's do it.
Thank you, guys. Now, this one is Oracle by Just Trading. That's the name of the handle, Just Trading.
Okay.
Isn't that great?
You know what? I love Oracle, and I love that Just Trading.
I know. That's what we're doing all day, guys.
To me,
we're just trading.
We're just trading, and that's it. Great handles. Great handle.
All right.
I love it.
Now we were talking about gaps in
Right,
Google.
right.
I mean, this cloud
Sloppy,
stock
very
is
sloppy.
it's a thunderstorm.
Yeah. No, it's a thunderstorm.
There's gaps all over the place. Mark.
Absolutely. And you know what? We identified the big gap fill here back in March, right? And now. What happened? We kind of traded below that gap area if you look at the chart. And we actually created more gaps below, right?
Sure.
All of the gaps have been filled. That's a great thing, guys, because if all the gaps are filled, price is like a magnet. Price is like a magnet, right? So price will gyrate to that gap area to fill that gap and then either head lower or go higher.
I love that. It's like a magnet.
Yeah. And in this sense, we filled all the gaps, and we did have the corrective rally again, right?
Yes. So the thing is, so we had a nice little run up here. Now, if I wanted to trade Oracle, I wouldn't want to buy up here,
No.
Mark. But so let's take a look at the targets where we can maybe get back in.
I like to see. That's why Fibonacci really comes into play, and it's so simple, so easy. You don't have to be a guru to understand it or learn it. It just gives you projective targets of where maybe price might stall and revert back to the upside. In this case, being long, right, guys?
Yes.
So I like that 38% fib. It coincides nicely, right,
with that. Beautiful. Yeah. Look at that. We have the 50-day, we have the 200-day, we have the volume profiles.
Yeah, it's a great spot
leading up to this 38.2%.
Great. It's a great spot. And if you are looking to get long, your dollar cost average a trade, you might not get all of your shares if Oracle decides to go higher, but it's a great spot to get. The probability's high, and your stops are going to be where? Below.
Yeah.
Below that 250.
Guys, consider this, and Mark, I wanted you to take a look. On this way up, we did have lower volume.
Yes, extremely low.
Extremely low volume, just straight across. So the probability that it will pull back it could happen.
It's a high probability that Oracle will probably fail or stall here, unless obviously if it's a news-driven stock, if something does come out positive, then yeah, maybe something might change. But until then, I still deem this as corrective. Absolutely.
That's correct.
I like the fact that we stalled up in this area, and if we do come in, MACD RSI will actually roll back down again as well, kind of alleviating that overbought reading, right?
Sure. So there's concerns if you're a bull, but it's not too shabby.
No, not at all.
Cool?
Yeah.
All right.
Not at all.
Next. Okay, now as a reporter, I don't like to be biased, but I have to say I'm so glad that gold was one of the featured stocks today. Thank you, Vinny Big V.
Big V, thank you
for
thank you for your request. And I love the GLD. I love gold. I think everybody should own gold in their portfolio, 100%. But where, right? Do you want to own gold GLD where it's trading at now? No, of course not. We want to buy it cheap. We want to sell it higher, or at least buy and hold it, and where you want to buy it at a reasonable spot where, hey, in 6 months, a year, 2, 3, whatever your time frame is, you're going to make money. So you're not going to chase this, right? You're not going to chase it.
We don't like to chase.
But I do like GLD. I like the way the pattern has been going. You notice that?
What a chart. Okay, so we had a beautiful downtrend. I'm going to say it's beautiful because look, it just
nice tight trading range.
Nice tight trading
lower
range.
Lows and lower highs.
Exactly.
Very identifiable. Nice downtrend. Perfect.
Listen, we went right across. Boom, 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 and now
we started the uptrend again.
We started the uptrend, and we have these nice little flag outs.
Yes. And you know what I like to see is when you're in that downtrend, right? You're always looking for that trend change. So as traders, we want to identify where is that next pattern going to be. We want to. I wouldn't say anticipate it too much in the sense that you don't want to say, okay, I think it's going to go here. You don't want to be predicting. We're not in a predicting game. We want to take as much information we can out of the charts and what's going on in the market, right? Seasonality trends in gold because it is a commodity, and then see where this market where gold would be headed. So since we went to this downtrend, and if you notice that we went sideways for 4 months, that's a perfect precursor of what's to come, right? Because what's going to happen? It's going to go higher or it's going to go lower. I know it sounds really simple, but it's the truth. And once we've broken down from the downtrend, we went sideways, we started its uptrend, and we took out that high, that consolidation. So that's what I like.
Glad that you pointed that out, Mark. Very important.
Very important.
Going back to that, we've been trending up. We have these little pullbacks on low volume.
Right, little flag patterns, right?
Yeah, I like that.
4 to 6 days. 4 to 6 days, you look for the repetitive patterns. So we had the first one down here somewhere around the end of November, December, and then we went up about 6, 7 days again. We had another 4 to 6 day pullback. We went up maybe 10 or 12, maybe 15 days, had another 4 to 6 day pullback, and then we did it again, and we're in it now.
Now the thing is, I was tweeting with Vinny, you
Yeah.
know, because I'm like, hey,
Sure.
yo, thanks, hey, yo, Vinny, thanks for the request. Now I think that he said he was taking profits at this point, and I gotta say, Vinny, I could see where you were coming from that, because we are approaching the 76.4% Fibonacci,
Right.
and that's gonna prove a lot here.
Right.
If we do fail that. Look at this thin zone,
Yeah.
Mark. Here, I don't know. Can you show it to,
Yeah,
to the audience?
it's problematic.
Yeah, look at, we have that
this thin zone
and
here.
that's a big.
It's like a magnet. It's like a magnet with price,
Yes.
guys. I'm going to tell you, as soon as we start breaking that area, that 61.8% Fibonacci retracement, for some reason, price just likes to navigate all the way back down to where we are, to the upper end of that sideways consolidation.
And then look at that, and then the support
Yep.
would be right there.
Yep, and you know what I like? I like the fact taking profits is always a good thing, right? We never want to have a profit go into a loss. And if you have a really nice profit here, there's so many ways of doing it. You can take a third off, a quarter. You can trail by the day, the low of each day of the candlestick. So there's a lot to do. Taking a little bit of profit off the table after this run, absolutely smart idea.
We don't blame you, Vinny.
I don't blame you, Vinny.
We don't blame you,
I don't
Vinny.
blame you at all.
All right,
absolutely.
So let's see the final request, and this is really special.
We're gonna have some fun here
Mark,
with this one.
you did have some fun with this one.
Yeah.
This is Chesapeake by G Green for Ya.
It's crazy. I love the handles.
Thanks,
They're great.
G Green for Ya.
So
Let's see what we have for ya.
Well, thank you very much for the request again.
Yes, thank you.
This is a good one. And I said, you know what? Let's have a little fun with this, right? Let's not just go through the charts, but I wanted to show you. I get a lot of requests on, hey, I trade gold or I trade oil or natural gas stock. Is this some sort of an edge I can get if I'm trading gold and oil versus
and
the commodity
stocks?
Right.
Okay.
So what I did was I said, you know what? Here's Chesapeake in front of us, but I want to show you my correlation chart. Very, very simple. You don't have to be a rocket scientist for this. It's simple. Stock
you're
charts.
so humble.
Oh, thank you. Stock Charts has this on their platform, and if you're a stock chart user or not, it's a correlation chart. And what you do is you put the underlying commodity, which is oil in this case, right?
Yeah, Chesapeake, obviously.
Right. And then we look, and then we overlay that with Chesapeake. And look at what did we find?
80% correlation.
80%
Cool
correlated.
chart. Cool.
That to me, anything above 70, 75% and higher is amazing. That to me says, okay, what does it do? Is that going to give us an edge? Sure, because what happens is, you're looking at the underlying commodity, in this case, crude oil. When crude oil starts to rally, right, or is rallying before the market opens, more than likely Chesapeake's going to follow, pending any bad news out there.
So if you're trading Chesapeake Energy,
yes,
you want to follow crude oil.
You want to follow crude oil, and
It's
if you're trading
80%.
gold, right? If you're trading gold, you want to look for correlated stocks that are heavily correlated with the gold, the underlying commodity.
Ah.
So really makes sense. So
Hey,
getting
two
back,
commodities we covered
Yeah.
this
There you
talking
go.
technicals.
There you go.
Okay.
Now let's
So
take a look at Chesapeake.
Let's do it. All right, so we had a ascending triangle back in February.
Nice, beautiful ascending triangle back in February, March, April, you're going into early May. We finally broke out of that ascending triangle, right?
Yeah. And so let's see, I noticed that, so we did reach a low here.
Yeah.
And I noticed that you pulled the Fibonacci from the low.
Yeah.
Okay, so what did you do here, Mark?
So I wanted to see where price would fail, right? So, okay, so we did have price try to break out right back in here, right back in October, right, or late October, and failed, right? So we made a lower high from this previous high back in November, okay? I'm sorry, July. All right, now what happened was now we started to roll over again, and price started to rally, but look where it failed.
Yeah.
And look at the volume profile, it's pretty
That's
amazing.
what I'm saying. And the volume profile is pretty high on the pullback, Mark.
Yep,
Would you
38% fib,
I
we
see
failed on
they
him.
pointed out like a little double top
Yeah,
here.
we had a little bit of a double top, nothing crazy. It's very small, but still, price peaked. We pulled back a little bit, and then we peaked again and failed. So that's a good spot. So that's a good area. Why? Why do I want to know that? Well, common sense, if the shorts are leaning on this area here.
Lean on me.
They're leaning on it. They're going to make sure they have their stops just above it. So if that can get above that 38%, we could possibly get a short squeeze back up to the 61.8% fib.
Which is the golden ratio.
Golden ratio, and even higher above the 200.
And above the 200,
Yeah.
which would make a nice.
And why? Look at that volume profiles. Look at the thin zone that we have when we break back above
Just
that
like
38%.
when we were talking about falling through a thin zone, you can fly through a thin zone.
Same thing. And remember, the volume profiles, whether it works as well as you're looking to buy it or you're looking to short it. It's like a magnet. It's like a gap, so to speak. Once we break out, We had very little activity, and that's where we're going to go to that next level, and we should actually trade rather quickly if that were to happen.
Hey, Mark, would you rather be a price magnet, or a chick magnet?
Oh, a chick magnet.
But right now we're talking about price. Finishing up the volume profiles, I'm going to say it's resetting itself again.
Yeah,
right?
it's unwinding. It's overboard from the corrective rally. So yeah, I think it's resetting itself, and if we can hold this area, I think that we can have a good shot that we break above the 38%.
And watch oil.
Oil is key. Remember, watch that.
Oil is key. All right, cool. That was a really fun talking.
That was. Wasn't that great? I like that.
Will you come back in the next week?
I love it.
You will?
I love it.
All right, cool. We got this.
We got it.
Thanks, guys, for
Thanks,
getting involved.
guys.
We will see you in 2 weeks for the next Talking
Technicals.